Okay, let's look at vertical financial statements now. So we've done horizontal. We look at this year versus next year horizontally, or we could look at a base year versus multiple years in a row across the spreadsheets. Let's look down the financial statement now, and we're going to look at this as a specific point in time. So a vertical analysis focuses on the relationship among the financial statement items at a given point in time. The common size financial statement is a vertical analysis in which the financial statement is expressed as a percentage. So we have two ways to do this. In balance sheets, we express the percentage as total assets. And in income statements, we use sales to express the total percentage. So let's take a look at an example. We're here at Clover Corporation again. We know our sales are 520 and our last year's sales were 480. That is 100%. We're using that as our base. That is 100%, and the rest of these numbers will be simply divided by that base number to get a percentage of their totals. So if we go down the income statement and we find operating expenses this year were 128,600 divided by sales. If we take the operating expenses divided by sales, we get the percentage of sales that went into operating expenses. And in this case, 128,600 divided by 520 times 100% gives us 24.8. In other words, sales, the operating expenses were 24.8 percentage of sales. As you can see here, last year's operating expenses were 126, so that was 26.2. So our operating expenses went from last year of 26.2% of sales to 24.8% of sales. In other words, our operating expenses as a function of sales have been going down. Well, that would be a good thing, right? We have less operating expenses and we're selling more. So that makes that's a very positive for the company. We can also look up here under cost of goods sold. This year we had $360,000 worth of cost of goods sold against 520 sales. Last year was 315 against 480. So our cost of goods sold went from 65.6% last year to 69.2% this year. So we sold more, but the cost of selling more not only went up in number, but it went up in percentage. So we're spending more to produce those sales. The cost of goods to build those products went up by looks like almost 4%, which is significant. So you can see how you can compare by going vertically down the income statement to compare last year versus this year to see how you're doing. You can also do this in a balance sheet way. So you can roll balance sheets off total assets and see how your balance sheet is going off total assets. So we have horizontal now as a one measure of financial statement analysis. The other is a vertical analysis where we roll off either sales or total assets, and we see each component of either the income statement or the balance sheet as a vertical analysis. These can be very helpful in looking through and seeing what's going on inside a company.